All right, good morning, everybody. Excuse me. Morning, Daniel. Good to see you. 9 a.m. on this 15th day of December. 10 more days to get your shopping in, guys. How's everyone doing today? Small crowd to start it off. Everybody slow rolling. Cold weather came in. People are moving a little slower today. Guys, my name is Mark Novak. I'm going to be walking you through the wonderful world of Nexgen today. We're going to talk an awful lot about rules and advantages, sticking to rules, writing a plan. We're really just going to focus for the first hour on giving you a basic understanding of what your indicators are telling you. We'll spend a lot of time looking at your charts, talking about what you see, giving you feedback on anything and everything that you do. Guys, I'm available 15 hours a week here live. It's like having a private tutor every day. Before we do anything, though, I always go to forexfactory.com. And forexfactory.com is going to let me know if there's any big news releases, anything that may make the market jump a little erratically. This morning we had an awful lot at 8:30. Core retail sales, Empire State Manufacturing, retail sales, Philly Fed, unemployment, all sorts of stuff going on. Looks like more people are working. That's a good thing. 9:15, 10 o'clock, 10:30, 4 p.m. We have a lot of low impact news. Those yellow boxes let me know that it's probably not a market mover. But those red boxes give me the ability to stay out of the way of those big money investors in case they make an emotional decision based on a news release. So I do that every day. Also, there's the Ninja Trader trade desk calendar. This is a good one. This reminds us when contracts roll. And guys, we're in the middle of that right now. Crude oil roll date is today. You always want to be aware of that, making sure that you're on the right contract. What happens is if you end up on the wrong contract, the volume goes away. It can be a little more erratic. So we're going to go to the education page here, and the first thing we're going to look at today is a software user guide. If you need to roll your contract, which you will need to roll crude oil, here's a link to how to do it, but we're going to walk through it real quick. I like to do this when contracts roll. You're going to want to open up your control center, and then from your control center, you're going to need to go Tools and Instrument Manager. We're going to put that crude oil in there. It shows us the futures. If I highlight it, it shows me the new expiration contract. And I'm going to give it a left click. This left mouse, boom. And now it's in my list. That crude 223 contract is available for me to build charts with. I'm going to click OK, but what I want to do is I want to make sure, let me go to my crude. I'm just going to keep it on there. I'm going to go File, New, and I'm going to build a market analyzer. And I'm going to see which is trading higher volume. So I'm going to go to the templates, and I'm going to load the default analyzer. Guys, this is in your templates already. Once I do that, I can put in the January 23 contract. I can put in the February 23 contract and see which one has more volume. Right now, January is trading higher. Probably stay on January for a day just to see what's going on. Elvis, I'm not sure. It's a Discord link. I'm not sure how to follow that. I'm clicking open link, but it's not doing anything for me, Elvis. If you want to elaborate, that'd be great. So guys, here's your volume right now. We're going to stick to that January contract, probably at least for a day. But that's how you do that. And when it's time to roll, it's pretty easy. John Novak will put installers on the site as well. He'll make sure that you guys can go from the resource page, NinjaTrader 7, download the installers. He'll get, oh, it was John's message on volume day. Thanks, Elvis. It's weird, I couldn't get it to open up. Fortunately, John Novak and I appear to be on the same same wavelength this morning. Having trouble talking, tripping over my tongue this morning. Guys, this user guide section is also where you're going to find anything and everything that you need with NinjaTrader. Computer preparation, troubleshooting, connecting, opening workspaces, scaling charts, adding stops and targets. All of that's available in the software user guide. This is your how-to. And then everything that we talk about comes from the tutorial section. And this tutorial section is really focused on giving the new user the absolute best chance of success. Teaching you to recognize advantages to keep you focused on the best of the best as you learn to read your indicators and understand your software. And there's a section that says first 30 days and beyond. Keep yourself focused on that one trade that repeats itself on every market, every day. That's that high probability trend trade, guys. So that's what we're going to focus on. If you have been in this class, you've heard this over and over. High probability trend trade. This is a trade that when you learn to execute it, it typically wins 70 to 80% of the time. This is a trade that when you deviate from it in the beginning, you typically find yourself a little frustrated, chasing things, wondering what went wrong. So we focused heavily on this high probability trend trade, this best of the best scenario in the beginning, because it's going to teach you to read your charts. And guys, 90% of what we do is chart reading. 90% of your day is analyzing your indicators, waiting for advantages so that you can take a high probability trade, so that you can get in on the right side of things, so that you can have advantages. Rules provide advantages. Rules have been back tested, forward tested, they've been historically tested, and the results have been the same from all the testing. This is a set of rules that typically wins 70 to 80% of the time. I'm going to give you a checklist for it. I'm going to teach you to write a plan for it. The only thing that you have to do is stay focused on it so you can learn to read your indicators in that first 30 days. Because when you learn to read your indicators, you're going to understand where the market is likely to continue. You're going to understand where the market is likely to go, and you're going to understand where the market is likely to stop. You'll be able to use continuation points for entries for your high probability trend trade. You'll be able to understand where the market is likely to go and use that for targets, and where the market is likely to stop, giving you a giant red flag that you have approached an area that may reverse the market. We call those termination conditions, and that's probably where we spend the most focus in the day, is making sure that you understand when you've given away that advantage. So we're going to focus on 3 rules, and we're going to do it on 2 charts. Very simply, on the left-hand side of your screen, when you open up your workspaces, is a 13-2 chart. And that 13-2 chart is a larger, slower chart. It's like a broad stroke of a brush. You'll understand the overall trend of the market. If the background is green on that 13-2, we're in an uptrend and you're only looking for rules to be met for high probability trend trades long. If the background is red on your 13-2, we're in a downtrend and you're only looking for rules to be met for high probability trend trades short. Just stay with the trend. The trend is your friend. You're also going to recognize the overall momentum of the market, rule number 1 for a high probability trend trade, as well as whether or not you've reached any of those areas likely to stop. It's rule number 2. Your first 2 rules out of 3 for a high probability trend trade are met on the 13-2. And when they're met, we'll go to that 5-1 chart and we will refine the broad stroke of the brush, recognize your best of the best spot, that area where the market is likely to continue, and use it for entries for a high probability trend trade. When you do that, it allows you to reduce your risk, maximize your profit potential. It gives you another advantage, the advantage of knowing where the market is likely to continue and letting that be the point at where you get in. So 3 rules, 2 charts, They're really pretty simple. Rule number one says after a breakout of a Fibonacci or after a new top or bottom causing a full reversal, the small triggers must be strong and located outside of the large trigger lines to look for trend trades rule 2 and 3. Guys, let's paraphrase. That's a lot of words, a lot of things going on. It's all great, but let me find this picture for you. I already made it. I typed it out, and it disappeared. So I apologize for the scrolling here. Don't want to give anybody a headache looking at this stuff. I take a lot of pictures. I take an awful lot of pictures. Every day, guys, I probably take 30 to 40 pictures, I think. Whether it's in class helping you guys, whether it's taking pictures of my own trades. It might be just taking pictures of things that I see on my chart that maybe I'm curious about, that I want to talk to somebody about. Let me get my editor to stay open. There we go. Sorry about that. Rule number one says that we have to have strong triggers. It's very simple. 2 words, strong triggers. This is rule number one. Rule number two is going to tell you no termination conditions. No, hey, good morning, Debbie. No trading into areas that are likely to stop the market. As both of these happen on the 13-2, and both of these provide very distinct advantages. And I want you to think of it like that. When you're following rules, what are the advantages that your rules give you? Well, rule number one, strong triggers, is going to give you the advantage of momentum. Rule number two, no termination conditions, is going to give you the advantage of a clear path. So before you ever get off that first chart, you've already got 2 very clear advantages as you look for your entry on the 5-1. And when you look for your entry on the 5-1, the rules tell you that you're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. And this is the one with the most words. They're all important. You're going to use a limit order, which means that you're going to let the market come to you. We don't chase price here. We enter when we have advantages. We're going to use a limit order to buy or sell a pullback, and that means a small retracement in price. If your market is trending up on your smaller, faster chart, you're going to allow that market to come down to look for your entry. If the market is trending down, just the opposite. You're going to want it to come up to your entry point. And your entry point, the rules have us entering at an area. And an area can be fibs, mid-bands, or 1-to-1s. And that area needs to be inside of favorable large triggers, inside of very strong large triggers. So we're going to break down each of these rules. We're going to look at them visually. We're going to talk about what they mean. If you have a question about any of the rules, I want you to raise your hand because I want to make sure that you have clarity, because this is your best of the best in the beginning. And rule number 3, by entering at these areas, by waiting for the pullback, it's going to give us the advantage of an entry where the market is likely to continue. So 3 rules on 2 charts, giving us 3 very distinct advantages to get us into a trade that typically wins 70 to 80%. This is your first 30 days, guys. This is a high probability trade. And I'm going to give you the definition. Guys, there's a whole glossary of common terms. If I ever say something you're not sure what it meant, ask me. If you're too shy to ask me, go to the glossary of common terms. Right now, we are focused exclusively on a high probability trade when each indicator on every chart agrees with the rules for the trade. And typically, this is when all the triggers are their strongest, no termination conditions exist, and there's no trouble spots between you and your target. This is your first 30 days for trading success. After your first 30 days, or maybe 20 days, everybody's different. That first 30 days teaches you to read your indicators. And when you begin to read your indicators, John Novak put a great example of that in there early of a trade that he took. you'll be looking for medium probability trades, and this is when most of your indicators line up for a trade. However, a small issue may exist, and this will be the vast majority of your trades. And when you're executing medium probability trades, you'll take them, you'll manage them assertively, you'll get out at a trouble spot, you'll get to zero loss as soon as possible, and your ability to determine the problems, to identify the trouble spots, to manage assertively, all of that's going to come from your ability to read your indicators. So we're going to focus on the first 30 days, the best of the best. But understand that this is your foundation. This is your platform that's going to help you grow into that next level. So rule number 1 says strong triggers. Here's a picture of exactly what strong triggers mean. In an uptrend, when your background is green on the 13.2, small triggers above the large triggers are wide, they're angled in the direction of the trend. When you have this strong trigger look, the odds are favorable for the market to continue up. Guys, this is your advantage of momentum, the advantage of odds favorable momentum. In a downtrend, small trigger lines break below the large trigger lines. Large trigger lines are wide, they're angled in the direction of the trend. It's that space created between the small and large that lets you know that the odds are favorable for the market to continue down. Once again, rule number 1, strong trigger lines. Strong trigger lines let you know that the odds are favorable for the market to continue. We stick to this strong trigger look in the beginning, that first 30 days, commit to it, because when the small trigger lines break inside of the large, anything can happen up or down, guys. You've lost the advantage of odds favorable momentum. So for that first 30 days, you'll be looking for these high probability trend trades from the point where the small trigger lines accelerate away from the large until they return. These circles on these tails or wicks on your 13.2 are potential long trade entries. You'll notice that they're only circled when there's odds favorable momentum. Same thing on the downside. You wait for that momentum to begin. If you're studying, looking for the best of the best, we'll be looking for these tails when we have odds favorable momentum, and when those small trigger lines come back in, we're going to stop looking. So rule number 1, odds favorable momentum. You guys with me so far? I'm going to put a Y in the room. That one's easy enough to recognize. That space between the small and the large gives me the advantage of momentum. Rule number 2 says no termination conditions. Don't trade into an area likely to stop the market. Well, a termination condition is a Fibonacci-based indicator that may reverse the market based on a comparison of the area and those trigger lines. Those areas can be blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1 dots, cyan divergence low line, or a magenta divergence high line. Be a large chart midband if the large triggers are a full bar away, or any third divergence in the same area. Determining whether or not you have a termination condition is really easy. It's a simple 2-step process. Price reaches an area. When price reaches that area, if absolutely none of your trigger lines have broken through the area, you can see that they all remain above. This is a termination condition. This is an area likely to stop the market. No more short trades. Rule number 2 reminds you to let an area break before continuing to trade in the direction of the trend. An area is considered broken when both the small and the large triggers make it to the other side. So as price reaches support, no trigger lines through. The small trigger lines will come through first. If there's odds favorable momentum, the area has the potential to break. But it's not until both the small and the large make it through the area that we consider support broken and it begins to act as resistance. A loss of momentum on this pivot creates a divergence line, that cyan line. This is one of the areas that we'll look for a potential termination condition. Price reaches that divergence low. Where are your trigger lines? They all remain above. This is a termination condition. No more short trades. This is also what we call a pivot stop out of a prior divergence condition, meaning that price reaches this cyan line, it exceeds it a little bit, and then trades the other direction. This pivot stop out is a very powerful termination condition. When we have a termination condition that creates a full reversal in the market, meaning that those large triggers go from red to green, it gives us odds favorable momentum. This is what we call a strong bottom. Recognizing a strong bottom puts you on that path to success. Focusing only on the 5-1 trend trades that happen after a termination condition on the 13-2 is your best chance of success. It can be a low or a high. If you have that same look at a high, price reaches this divergence high. It also reaches resistance, exceeds the divergence line, and then heads the other direction, gives us a full reversal, odds favorable momentum. This is a strong top. Strong tops and bottoms are simply termination conditions that create full reversals. I like this picture a lot because it reminds us that 90% of what we do is reading indicators. Price reaches resistance, your trigger lines remain below, no long trades. Price reaches support, trigger lines remain above, no short trades. 90% of what we do is sitting on our hands and waiting for the best of the best. That pivot stop out creates a full reversal, gives us odds favorable momentum. Now it's time to look for a trade. Even with odds favorable momentum, we're going to give these termination conditions a certain level of respect because price is trending down. The odds are favorable for it to continue in the direction of the trend, but then price reaches these one-to-ones. The price bars reach the one-to-ones. Have to ask, where are your trigger lines? They've all remained above the area because they have no more short trades. Keeps you safe here. This termination condition creates a full reversal. That full reversal gives you odds favorable momentum. This strong bottom creates your best case scenario for a high probability trend trade. Here a pivot creates a full reversal. Notice that it's not a termination condition because price did not reach an area. But it creates a reversal, odds favorable momentum, no termination conditions. This is still a good looking trend trade, but this is your highest chance of success. When these pivots don't come from an area, our final termination condition is going to help you see that on a smaller, faster chart. And 3 divergences in the same price range may terminate the trend. A divergence is a loss of momentum. When that loss of momentum happens 3 times, it may reverse the trend. When that 3 divergence happens and your trigger lines, smalls break inside of the large, it adds power to that termination condition, increases the likelihood of it going up. When that 3rd divergence is higher than the previous from a low, lower than the previous from a high, it's a head and shoulders pattern. It adds another layer of potential for that market to turn. So if your 13-2 is broken through areas, all of your trigger lines, the trigger lines begin to weaken on the 13-2, you'll see that same loss of momentum on the 5-1. Not only will this keep you from taking low probability trend trades where the market's likely to turn, recognizing divergence on the 5-1 is going to put you in a position where you can see the change happening faster, and it's going to allow you to manage those medium probability trades when you begin taking them. So guys, rule number 1 gives us the advantage of momentum, right? Rule number 2 gives us the advantage of a clear path. Rule number 3 is going to give us the advantage of trading from an area where the market is likely to continue. We are pinpointing that area for entry. Remember, rules 1 and 2 are met on the 13-2. Rule number 3 is on that 5-1 chart. And on the 5-1 chart, when the rules are met on the 13-2, it's going to look very much like this. In an uptrend, you're going to have an awful lot of up bars. Your large triggers should be strong and angled in the direction of the trend, and this is where you're going to focus your attention. This is where you're making the decision that it's time to take a trade. There's nothing to do yet other than make that decision. We're going to identify the large triggers strong in the direction of the trade, and we're going to look for those areas, fibs, mid-bands, and one-to-ones, and we're going to see where those areas are likely to fall within those large triggers. Because remember, rule number 3 says we're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. That means that we need a pullback. When everything is screaming up, we want the market to come down because the market rarely moves in straight lines. It's a battle between buyers and sellers. When the buyers are in control, when the trend is up, when the momentum is there, when nothing's in the way, we're going to let those sellers create a little attempt to push it down. This reversal bar signals the beginning of your pullback, that small retracement in price. And at the time of that reversal bar, you're going to be able to identify the window of opportunity, that area where the market is likely to continue. And guys, your window of opportunity extends from the highest point of support to the lowest point of support inside of favorable large triggers. Because of the momentum and nothing in the way on the 13.2, when we get this reversal bar, when you create your window of opportunity, you're going to right-click and activate your limit order right at the top of that window. And one of two things are going to happen. Either the market's going to come down to the window, it's going to fill you, and now you're in a long trade. It's 79.21. You've entered the market, you've bought the market, and you've done it because you have the advantage of momentum, because you have the advantage of a clear path, and because you have the advantage of placing that order at the area where the market is likely to continue. I say the word advantage a lot because I want you to understand that when the advantages are present, the likelihood of this trade reaching its profit target are 70 to 80%. When you begin to give away advantages by breaking these rules, that percentage goes down. Your initial stop when you enter at 21 is going to go below that window of opportunity. And when that market begins to trade, begins to move in the direction of your trade, you'll be able to reduce risk. Because you waited for the pullback, your profit potential is maximized. Guys, I'm going to take this picture real quick because I want to show you something. When we talk about windows of opportunity, I'm going to use two colored shapes here. The first shape goes from the top of the large triggers to the bottom. These are your trigger lines from the top to the bottom. Your window of opportunity is the highest point of support to the lowest point of support. And I think that a lot of new users are looking for a pullback to the large triggers rather than a pullback to the area inside of favorable large triggers. Let me change the color on that one. So the first box is that range from the bottom to the top of the large triggers. That second box is your window of opportunity, that area where the market is likely to continue. We had a couple people needing a little clarity on that, so I just wanted to cover it one more time for you. And then guys, finally, putting the two charts together, this is going to be your tool for study. This is going to be how you develop trust in these rules, how you take a look at what's going on and establish my rules are met. Remember, everything starts on the 13.2. Whoops. And on that 13.2, it's a 1 bar event. This is after the fact. The 13.2, the market's already moved. It's done what it's done. So we're going to scroll back on a 13.2. We're going to look for odds favorable momentum. And if we see odds favorable momentum and we have not reached a termination condition, you're going to circle the tail. You're going to circle that wick. You don't know where this wick is going to happen on the 13.2. Remember, we're only using that chart for momentum for no termination conditions. If that circle lines up with an area of support inside of favorable large triggers, then you know that your rules are met for a high probability trend trade. Guys, this is how you're going to study. You have the ability to go back 10 days to look for every instance with odds favorable momentum, with no termination conditions, circle your tails, and see if they line up. This is going to teach recognition of the best of the best. This is going to teach patience, because you'll realize that those triggers aren't odds favorable all the time. And it's going to create trust in the rules, because if you scroll back, if you look at things, you're going to see it over and over. Today has not been the best moving day. But let's see if we can find an example. Here's small triggers breaking through areas outside of the large trigger lines. That happened right around 5 a.m. I was still sleeping. Let's see what that 5 a.m. circle looks like on a 5-1. That's a lot of scrolling to go back, guys. You had to be patient. Well, 3 divergences in the same area. Probably not taking this trade, but you'll notice that it still pulls right back to an area of support, that bottom of the window of opportunity inside of favorable large triggers. You're going to see this happen over and over every day, every market, every chart. Price reaches resistance. None of your trigger lines have broken through on crude oil. No more long trades, guys, and look what happens off that termination condition. But now we're trading into support. No more short trades. We've reached an area likely to stop the market. Look at the bounce that it created already. So you go into if then. If support breaks, if the trigger lines get through, we'll look for an opportunity. If support holds, we'll wait for triggers to roll to clear that top. We'll look for an opportunity. And guys, this is a big part. Patience is a huge part of what we do. Here's one of those pivot stop outs right at support, creates a full reversal, gives us strong triggers. But what we have here is what's called a 50-50 trade. My small triggers are broken through an area with an awful lot of momentum, but this 1-to-1 area isn't broken. It has the potential to break. When a 1-to-1 has the potential to break, ideally your entry on the 5-1 should be perfect. Your smaller, faster chart should tell you that you have an advantage, and that advantage means no divergence, strong triggers, small window of opportunity. If you look at this one with the odds favorable momentum, the time of entry, as it pulls back, you've had 2 losses of momentum on the 5-1, but more importantly, look at your window of opportunity. Not only do you have a loss of momentum, you have a window of opportunity that's almost 3 points wide, meaning that your risk is at least 4 points on an area that only has the potential to break but hasn't broken. Guys, does that make sense? This is your 50-50 trade. This is the trade lost consistently by more new users because they get excited about being in the market and it forces them to stop looking for the advantages. 50-50, divergence, look at that thing push down. Good stuff. Guys, are there any questions about a high probability trend trade? Any questions about recognizing advantages? Smalls below the large, larger wide, angled in the direction of the trend. We're coming from a good top. Your first 30 days should be dialed into finding your entries, guys. Your first 30 days should be learning to read your charts, to recognize the advantages, and have the confidence to take them. So you're going to want to write a plan. you're going to want to define your entry, personalize it, make it yours. My trade is the high probability trend trade. In order to take this trade, the rules of this checklist must be met. As I provided a checklist at the beginning of class, I also provided this example plan. This is just defining your entry, making you comfortable with what you're seeing, what you're looking for. The checklist was provided. Do you have odds favorable momentum? Are there no termination conditions? Do you have an area for entry? These are the rules for a high probability trend trade. Also at the top is the market coming from a good top or bottom, a termination condition that creates a full reversal. There's a note on the checklist that says that one increases likelihood of success, but it's not mandatory. If you can answer yes to each of these every time you take a trade for the first 30 days, you're going to be giving yourself the highest chance of success. So write a plan that gives you the highest chance of success. Define your entry. In order to take this trade, this checklist must be met. And then put pictures of your best look into your plan. If I click on the link, I have a 100% rules met high probability trend trade picture reminding me exactly what I need it to look like to take one of these trades. As you grow into those 50-50 trades, those medium probability trades, you may write more rules. Your plan is going to grow. Your entry conditions are going to change as your ability to read indicators change. On a 50-50 trades, no divergence will be present on the 5-1. I love that rule for new users because we just saw an example of a 50-50 with divergence. And then here's a 50-50 without divergence. Let's take this picture. Look at the difference, guys. 50-50 with divergence, 50-50 without divergence. One for the win, one for a pretty drastic loss. Give yourself the advantage every time. And then once you nail these entries, once you've spent time focusing on your entries, you're going to define your management plan. Your first 30 days isn't about a big P&L. It isn't about a bunch of winners. It isn't about a huge win percentage, making a ton of pretend money. It's about understanding your entries, learning to read your indicators. Management comes from an ability to read your indicators, so keep it simple and keep it mechanical in the beginning. I love this one. This is my favorite for people learning to read indicators because it removes emotion. I will trade 2 contracts. My initial stop will be 12 ticks, and it will be adjusted above or below the window of opportunity initially. It's a very mechanical approach to putting in your initial stop. That stop will be moved 2 ticks above or below the reversal bar in the direction of my trade. Once again, it's mechanical. There's no room for emotion. If this happens, then I do this. I will take profits on my first contract at $100 and move my stop to break even manually. This kills the home run hitter in us, guys. But what this does is it produces quick profits and it puts you at a no-loss situation. You get a dopamine kick. Even on simulator when you win a trade. This little taste of success is going to help you with confidence. And it's also going to allow you to hold that second contract to your second target, that $200 target. In the very beginning, you're going to have a lot of $100 trades with break-even exits. It's going to be part of it as you learn to read your indicators. But you're going to be able to use this spreadsheet, and this is provided for you. Let me show you where. This spreadsheet, provided by Nexgen, it's in your study folder right now, Nexgen Study Picks folder. Or if you want to download the latest version, guys, there's the latest version. Your first page is nothing but your live trades. Your first page, your first tab, every time you take a trade, put it in there. Win or lose, annotate the chart, put a picture in there, and this is going to help you identify those patterns that are going to make you successful. It's also going to identify patterns in yourself. We all break rules in the beginning because we don't have a firm understanding of them. It's totally normal, totally natural, nothing to get upset about. But if you start tracking your trades, what you're going to do is you're going to realize which rules you have a tendency to break. Maybe you trade into termination conditions. Maybe you don't wait for odds favorable momentum. The next page is the Nexgen Trader favorite look. You're going to fill this page up. Your best of the best, your high probability trend trades. You're going to load this section up with all these pictures. Guys, here's my favorite looks. I've got almost 75 of them now. Each and every one of these is a rules met, high probability trend trade. And you'll notice this is a rules-based high probability trend trade that didn't work. I had every advantage and it didn't work. Anything that wins 70% of the time isn't gonna hit the finish line 20 to 30% of the time. So what I do based off of all these pictures, based off of these perfect entries, is I'm going to begin to learn to manage. I'm going to begin to read my indicators and understand when I can hold more, when I need to get out sooner, how I need to manage medium probability trades. So I'm going to build a section from my personal trade setups, and I'm going to turn it into management things, teaching me to manage, chart reading patterns that I recognize, termination conditions. And you're going to build all of this. And then guys, if you download the new one, you've got over 60 examples stolen from my spreadsheet and put into that new spreadsheet, so you have something to study. You've got a little bit of a cheat sheet there. As you begin taking trades, you're going to be able to recognize. And more importantly, we'll steal one of Paul's examples here. Paul's been with us for a while, so Paul doesn't write his rules on the charts quite as much as he used to, which is okay. But I want you to either, if you have Snagit, I want you to get in the habit of putting this checklist on there so that you can verify for yourself that it's a completely 100% by the rules trend trade, or even more so, if you have capture software, guys, I want you to write your rules. I want you to tell me why you got into a trade. I want you to tell me why you picked your spot. I want you to tell me why you got out. Because if you take this picture with your annotation, and every time you do it, you come and drop it into this room, we're going to have a conversation about anything and everything that you do. We're going to talk about the advantages that you had. Maybe we're going to recognize advantages that you gave away. We're going to talk about, was your entry the absolute best entry? Did your targets make sense? So each and every time you take a picture, each and every time you take a trade, post it in the room, get that feedback. Make sure that you're putting yourself in the best chance of success. And if you are, you're going to get to where you want to be, guys. There's no doubt in my mind. Participate in your own education. One of the most profound statements I've ever heard. I'm going to give you that example plan one more time, guys, and this is where I invite you. If you write a plan, if you want feedback on your plan, send it to me. We'll talk about it. Let me know what your rules are so I can hold you accountable to your rules. When I look at your charts in here, typically we're talking about high probability trend trades. But sometimes there's trades that come out, that come from beyond that come from a different set of rules. If you let me know what those rules are, we can talk about them, we can grow them, we can build them. Ed S. posted a chart in the room, and he said that the 21 chart told him where it was going. Ed took a 50-50 style trade. Didn't quite wait for the pullback, Ed. Stops in place, and you just held that thing all the way down. That's a big hold. It's a large, sharp movement. Looks good, right? Odds favorable. As the market pulls back to resistance, all the trigger lines say resistance is likely to hold. Ed said there's no reason to get out yet. And he takes it all the way down. Nice trade. Great chart reading. Guys, this is using a larger chart to help you catch moves on a smaller chart. Paul, why isn't that chart moving? Because it's a picture? Maybe corrupt data, Paul. It's very possible that there's some corrupt. You did? Okay, you built a new one. I opened my charts the other day, and they went from 8:30 a.m. on the previous day to midnight on the following day. I had to go through, reset my database, kind of rebuild everything. Odds favorable, 50-50. Small window of opportunity coming from a pivot stop out with divergence. Looks like you took some quick profits, got out break even. Nicely handled, Paul, on a 50-50. Gary, you went long, fighting everything. Then you went long again, fighting everything. And it worked out. But man, that's fighting some momentum. And then you went long again, fighting everything. Gary, I see 3 longs fighting triggers. And then finally you went with the direction, and it was a pretty easy win. Gary, can I ask why? 3 longs? You don't have to answer. You're probably trading. Guys, I'm going to share a book. It's tongue-in-cheek, but it's very, very true. How to Commit Financial Suicide in 1 easy step. Trading against strong triggers. 3 times 3 losses. Gary, I've done it. Revenge trades, guys. When you take a trade that doesn't work and you're so mad about it, you take it 4 more times because you figure you're too smart. Been there, done that. Been there, done that. May have done one today. But I like the recovery, Gary. I like the 50-50, no divergence, beautiful entry, money on the target, money again. Nice trading. Nice turning it around. Dimitri, good to see ya. 50-50 with divergence, you get in. Anything you could do different to minimize your risk? Of course not. If you're going to take a 50-50 trade with a loss of momentum, you're waiting for that reversal bar. When you got in, Dimitri, it gave you a reversal bar. You could have been behind there, but you would have been stopped out. Then you get a second higher divergence and a trend change on an area that hasn't broken yet. Nope. If you're going to hold for dear life, you did exactly what you're supposed to do. Hold for dear life. It's a nice trade, Dimitri. It's a good hold. Not a high probability trend trade. Ed, everything says down. You take a pullback, make money. And then as we get to the bottom, trying to figure out where we're at here, 19. 1918, 946, 946. At this point, everything says up and you go short. Doesn't make sense to me here. over here it does make sense to me. Dimitri, it has to be a trade that you're comfortable with. A 50-50 trade, right? The area hasn't broken. Not yet. But let's look at the advantages. The advantage is you have odds favorable momentum. The advantage is you have a great top. It creates a full reversal. What's the disadvantage? The disadvantage is this area hasn't broken and you're losing momentum on the 5-1, which means that it may push up higher. I'm not sure what your yellow line is here, but it means that if you're going to take this trade, you've got to understand that it may push up higher. It's not quite broken. There's going to be a fight at these areas. Guys, Fibonacci areas create fights. Here's your 85 fib, right? Look what happens. Up, down, up, down, up, down, up, down. Guys, I took another picture of it this morning. Actually, this one's from yesterday. Key Fibonacci area, down, up, down, up, down, up, down, up. You can literally see the fights that happen at these key areas. See if I can find the picture from today. Here's the one from today. Right at that key area when the market's trying to figure out what it's going to do, look at your smaller, faster chart. Guys, there's a huge amount of indecision that happens at these key areas. These are the areas where buyers and sellers are poised to fight, are ready to battle for supremacy, to see who's going to take the market up and who's going to take the market down. Next-gen users, you have the amazing advantage of understanding where these fights are going to happen, and you can see them happen on the 5-1. These guys, these giant sharks, these big money investors, these deep pockets, these are the guys that are fighting at these key areas. If you take the mindset, let them fight, I'll be a remora, it's going to keep you out of a lot of these problems. So when I look at those 50-50s, Dimitri, I know that I'm in a place for a fight and I know that I'm losing momentum. You have to decide if you're willing to take this this medium probability trade. Are you willing to keep 13, 14 ticks of risk? Are you going to get out when it starts to go down? You have to have a plan. Manage assertively. It's not that it's not a good trade. You have to have a plan for taking it. You have to understand what happens at key Fibonacci areas and then determine whether or not you're willing to take that risk. My personal plan, I don't care for this trade. I'm willing to move it because I find that it loses more than it wins when I take it. And that's what this picture was. You're welcome. 50-50, right? Divergence prints, it pushes below. 50-50 again, no divergence, creates a pretty easy winner. I've done a lot of study on these. Done an awful lot of study on those because I was getting my butt kicked a lot. Odds favorable, couple divergences, same exact trade. It decides to push up, right? There's 3 divergences in the same location. It's just a rough area. 50-50 with a pivot stop out. There's that divergence. Gary has an 8-range chart, right? This 8-range chart gives a little information. And Dimitri, are you trading with a market flow chart yet? And that market flow chart is something that you guys are going to add in eventually. Not yet. So I want to show you something. Guys, I love the market flow chart. This is a confirmation chart. That's all it is initially. So I have a strong top giving me odds favorable. But that odds favorable momentum is at a key area. It's a 50-50. Divergence prints. I know that this is my window of opportunity. Some people will use an 8-range chart and wait for this signal to say, okay, now it's time to go. If you waited for this signal, you already have a stop established. You've had a signal tell you that the area is likely to hold up here. Coincides with all of these. Shows that overrun a little bit. So that's your next step, guys. You know, we talk a lot about building a foundation. You're building the foundation, looking for the best of the best, creating this database in your head of what it'll take to get you in. And that's going to refine all the time. Here we have anything can happen triggers, and you have divergence. No trade, right? No loss. Nice job. Paul, one from replay. Pivot stop out. We love that. Smalls below, large above, no divergence. Nice entry. This was a hold 2 ticks behind the pivot. Should have been at break even because of the first target. Fast forward, which is why you got more. Any reason to hold this like you did? What do you think, Paul? Termination condition. Let's talk through it. Dimitri, you can learn about it from the education page. Believe it or not, we have rules for everything. Were my rules met for management, Paul? 2 ticks above. I don't know, took the first target. Do your rules say go break even? Oh, okay. I got you. You know, there's cases, Paul, where when everything says down, when it's coming from a good termination condition, if it's a 50-50, then you nailed, then you broke your rules on management, right? If your rule says break even on a 50-50 after the first target, you broke your rules for management. But let's go to the flip side of that, Paul. It's still a 50-50 with odds favorable, right? You never had divergence, and it just pulled right back to an area of resistance inside of favorable large triggers. Is this still a rules-based trade? This is how my mind has to work sometimes. Is this still an opportunity where you could re-enter the trade? So, is it worth it with $100 in the bank to keep your stop where the market shouldn't go because the rules are still met? Maybe if divergence prints, it's a different scenario. But at this point, this bar is the exact same trade that this bar is, right? Still rules met, 100%. The same reason that if I'm in a 50-50 trade with no divergence and divergence prints, I'll exit the trade because now my rules for the trade aren't met. Does that make sense? Suddenly, your management plan grows. If the rules are met for an entry, does it make sense to take an exit? And that's a question that you'll answer for yourself over time. But that's your nudge in the right direction. Was that pretty good? Was that clear? Ed S. Odds favorable, no termination conditions, absolutely nothing in the way. And you said, you know what? I want to give up a 1.5 by not waiting for the area. Ed. Entry was a 1.5 lower. Still an absolutely beautiful trade. You just had to sweat out a little bit of a pullback right to the area. Increased your risk by a 1.5, reduce your profit by a 1.5. But Ed, absolutely beautiful trade. Rules-based, 100%. You just got a little antsy. Nice job. All right, guys, we made it through the first hour. We made it through your pictures. I like it. The market is just screaming down. Got your S&P going lower. There's crude oil going lower. There's odds favorable momentum. There's no termination conditions. That's a big window. It may make the termination condition. We never know. Guys, I'm going to take a few minutes. I'll leave you with crude, or you know what? I'm going to leave you with the S&P. We'll see how these termination conditions react. I don't know. Was it bad news, Elvis? I never look at what the news says. I only look at when it releases. Was it bad news today? Employment numbers are down. Or rather, unemployment numbers are down. That should be a positive, right? Mostly terrible. Bummer. That's why I don't pay attention to the news. It just makes me sad. Guys, I'm going to take a little break. I'll be back in a few. When I come back, Ed, we'll start with you. If you have questions, post them. If you have charts, post them. I'll be back in a minute, guys. All right, y'all, let's get back into it. Elvis, today's news results. Yeah, I guess that was a bunch of negatives, huh? Emotional responses from the people trading the markets. That's why we don't jump in front of news. Ed S. NASDAQ, too big for the 5-1. I agree, Ed. NASDAQ is an absolute whipsaw. I have seen people in the past Trade the NASDAQ using a 21 and a 13, just like that. Looking for the pullbacks coming through. So it's a completely different strategy. Yuri, good morning. Little late on the entry. Sure do like the trade though. Coming from that area that's likely to stop the market, everything's coming down. This is a little bit ahead of a high probability trend trade, but kind of going with everything. Nice little pullback. You get in a little late. 76.22 wouldn't have been a bad target, but you're holding for that big one, not leaving any risk on it. But your stop is right in the middle of a pullback there. Not willing to give too much back, but willing to let it run a little bit. Jose Trades, nice to see you in here. Anything can happen, triggers. Broke all the areas. Pull back directly to the area. Quick profits, second profits. Nice trade, Jose. Shane, tail end of momentum. No termination. Pull right back to resistance. It's right there inside of the large. You're good. Hit first target. Second target. Yep. Nice trade, Shane. Absolutely. So, Shane, when we talk about the best look on triggers, you know I have a picture for it, right? Synthetics and large, one on top of the other. That's the best. Large and synthetics. Because what happens, the reason that these are on your 5-1 is because it has been proven over and over. Well, you want them inside for sure. You want them trending one on top of the other. This is your best look. Gives you a tiny window of opportunity. Gives you like all of this just magic right on top of each other. When they're split like this, that window of opportunity grows. Is it going to pull back to these triggers or is it going to pull back to those triggers? Is it going to pull back to this area? Is it going to pull back to this area? When everything is right on top of each other, man, it's nice. So when you're looking at those trending one on top of the other, your large were down, your synthetic were up, and it pulled back to the synthetic, right? Not the best momentum. Loss of momentum, and it went right to the top of that range, right to resistance. How do I change my ATM strategy standard, Bobby T? ATM strategies, click the 3 dots. You found it? Okay. If you need help, let me know. And guys, that S&P is just working its way down. We have a pivot, not from an area. 1, 2, 3 divergences in the same general range. Doesn't mean that this trend is over, guys, right? We're trading into resistance. Absolutely no trigger lines through that area. 41.78 has a chance to break. There's no long trades into this area. There's no short trades against these triggers. 90% of what we do is waiting for an advantage. Yuri, that 22 spot held, didn't it? Stopped that market cold. What? What an amazing advantage you have to be able to recognize 76.22 and to be able to understand it as a termination condition because you studied, right? Because you said, hey, when price reaches this area and absolutely no trigger lines go through it, it's an area likely to stop the market. What a great profit target. Or you can hope that it blows through. So when we hit 76.22, you had an indication with divergence on your 5-1. Guys, it doesn't mean that the market's going down, but this is a psychological number. I want you to see this. Let's talk about these divergence lines. As the market pushed down, the sellers lost momentum, and they were able to push up to resistance. The buyers lost momentum, and they pushed down. Sellers lose momentum here, and the buyers fight. The sellers fight back. Guys, this was the line in the sand where the buyers said, no more sellers. We're pushing up. Guys, you had the advantage of knowing that this line in the sand existed for the last hour. Just like you knew that this fib was there, that you knew these fibs were potential spots, this fib, that fib. All of these are a reflection of fear and greed. Remember we said key areas are where the sharks fight, right? You knew that there was a potential fight here. Gives you an opportunity, guys. It's going to keep you out of trouble. It's going to help you keep money in your pocket. Paul, anything can happen triggers. Divergence on the 5-1 with the small triggers already working their way inside. No areas inside of favorable large triggers. You had a reversal bar with divergence and anything can happen triggers on your 8 range, and you had a breakout bar from a reversal bar with divergence. Yeah, Paul, that was a little aggressive. Paul, can I use you as an example real quick? Is it okay? Make sure you're feeling all right. If I get a reversal bar and it's followed by a white bar, it's a breakout bar. Let me pull up an 8 range chart. Your reversal bar was down here. This is a white bar into a potential area. If this bar is a reversal bar, it gives a signal. White bar into the area, right? But this is also a breakout bar. Let me see if we can find one. There's your reversal bar. There's your breakout bar. There's your HVA line. There's your reversal bar. There's your breakout bar. There's your HVA line. Every now and then, you'll get one of these where it's kind of caught in between, and that's why you use it for confirmation. There's your reversal bar, there's your breakout bar, there's your HVA. There's a reversal bar, there's a breakout bar, there's an HVA. So, and sometimes it means, so let's see if we can find an example. If we're looking for if I'm looking for a short signal from 77.35 and I get that white bar coming into it, that might be a good indication, right? And then if they get that white bar after the reversal bar, that's showing me a lot of strength. So when I'm looking at, and let's pull your picture back up. This white bar isn't coming into an area inside of favorable large triggers. This white bar isn't working its way into a rules-based trade. If everything, absolutely. So it depends on the scenario. It depends on what's happening. If the rules are met, if this mid-band, Paul, was inside of favorable large triggers and everything's screaming down, rules met 100%, and you get this white bar into the area, that feels pretty good. But if you've already weakened everywhere and you get a stranded sellers and you get this white bar with nothing but buyers after the stranded sellers with weak triggers, with weak triggers, with weak triggers, yeah, you dodged a bullet there. To take $100, you got to share them all, right? Got to share them all. Guys, there's lessons in everything that you post in here. Sometimes you don't know the lessons are coming. Check it out, guys. They're revisiting that 22, right? Hit it. I'd love to. Hit that 22 area, no trigger lines go through, pulls all the way up to resistance. Large triggers don't follow. Market comes all the way back. And guys, look at this. One tick beyond that psychological area. One tick. How's that for a pivot stop out? And look what the market did. Pretty cool, isn't it? You guys knew that was there. Thanks, Nexgen. I can identify where the market is likely to go, where the market is likely to stop, where the market is likely to go and stop. No triggers through. Rule number 2 is not met. I don't have odds favorable triggers. I've got one down, one up. Small's against it. They're split. They're crazy. Guys, do you see how having advantages and giving away advantages? Here's that S&P. Lost momentum. Lost momentum. Market pushes all the way up to that resistance. Large triggers. Closes the gap to the large triggers. Everything that we do is chart reading, guys. And I'm not going to lie, today has been not the most opportune day. Financial suicide. Yeah, without a doubt. That's the boredom trade. That's the man, I'm ready to be in a trade. Isn't it? We've all taken that one. Sure hope this area breaks. Man, wouldn't that be awesome? This thing will go down forever. And it just doesn't. Sometimes it will, which is going to teach you to break your rules. That's the worst, is when this trade works, Paul, and you're like, yes, this is one of my trades. And then it does what it usually does. Elvis, that's why. Because your rules aren't met. There's only 2 things that can happen, right? Either my rules are met or they're not. That's it. No matter what happens in the market, if my rules aren't met, I'm not taking a trade. Guys, there's that pivot stop out. Look how the market reacts. And more importantly, let's talk about what we see here. Because I want you to understand the advantages that this software gives you. This is such a big deal. The buyers are in control. Everything says up. And guys, there's a few key areas, right? There's 3 fibs here. We don't know which one is going to hold. We know that we are losing momentum. I'm not sure what the 5-1 looked like. Buyers are in control all the way to resistance, guys. Here at 77.32, this is where either the sharks are taking profits or where sellers with deeper pockets said this is as far as we're going to let them go. The sellers take control and push it almost to support, where a group of buyers say, nope, we want it to go up, but they can't fight that momentum. They can't fight the sellers. The trigger line suggested it, and they make it not only to the key area, but that momentum pulls them beyond, where you can see that they're losing momentum. When they lose momentum, the buyers push it right back up, and you notice that they push it right up to that key area, right to that area that you knew about that was likely to stop the market based on your trigger lines. And the sellers take over all the way down to that key area that the buyers put in an hour ago. The buyers fight back all the way to key resistance. Trigger lines don't follow, and the sellers try again. The buyers let them get one tick beyond a little false confidence, and then they push back. You're witnessing the fight between people with a lot of money. Our job is to pick off these little winners in between. You don't have to be first. You don't have to pretend to be a shark. You don't have to fight momentum. Let them do what they're going to do. Let them fight. One of them is going to win, guys. When they win, they're going to give you odds favorable momentum. When they win, they're going to give you no termination conditions, and then you're going to be able to take advantage. Sellers were in control all the way down to 33.50, at which point the buyers pushed as hard as they could. Look at the momentum. Directly into an area of resistance with absolutely no trigger lines through. We're about to find out if anybody with deeper pockets than the buyers wants this thing to go down. We have the advantage of not trading into this area because we can see it. And we don't have to be first because everything says up. Give me a Y in the room if you're with me on that. Guys, there's probably going to be a lot of mic silence today. There's not a ton going on in the market. Sometimes you're going to be so busy it's literally exhausting, and sometimes you're going to be so patient when it's all over. You're going to be like, wow, I did a whole lot of nothing today. But I didn't lose any money into this termination condition, and I didn't lose any money into this termination condition, and I didn't fight triggers. Who's going to win, guys? How many of you are starting to hope, getting bored, thinking, man, everything says up. Look at that. Everything's green. I'm going long. Who cares? Right? Let them do their thing, guys. Go make a sandwich. Walk your dog real quick. When the market isn't giving you anything, sometimes it's better to walk away. Pick up your phone. Play a game. Text somebody, call somebody, do some online Christmas shopping. My job is to have advantages. I don't have them yet. Termination condition for the win, right? Guys, what do you want to talk about today? This is one of those days. No trade is still a trade of protecting capital. Yeah. The average human tends not to walk into traffic. Termination conditions are like walking into traffic. It's not clear. You don't have a path. New users will get frustrated. I feel like I should be trading. I feel like I should be doing something. Am I missing something? And there's nothing going on. And you start going back and forth. And you're like, oh, I just want to find a trade. I want to find a trade. Where's my trade? Anyone ever done that? Back and forth, back and forth, back and forth? And your brain starts trying to create advantages that aren't there. Well, maybe because the large triggers are up, I should go long. Oh, maybe because it's a termination condition, I should go short. I've done it. My hand's raised as high as it'll go, guys. Just pop my shoulder out of joint, raising that hand. I've done it. Either rules met or rules not. That's it. That's all you can do. You know what the worst part is? Another one of those things that happens to new users. And let me know if you've ever done this. So I don't feel so alone. Has anyone ever said, this is my 50-50 trade with no divergence, I'm going long? And then, when this one doesn't work, you say, well, that fib should probably hold, so I'm going long. And then when that one doesn't work, you say, well, they probably just overran it. I'll try and go long right here. And then that one doesn't work. And you say, well, this fib's got to hold because this long was supposed to work. And then that one didn't work. You're like, well, if that one didn't hold, this one's got to hold, right? You guys ever done that revenge trading mentality? Yeah, Shane, you're very right there. We are professional waiters. Guys, this is one of the most damaging to your capital things that can happen to a trader. This short should have worked. When it didn't, I'm going short at the mid-band. Okay, I'll go short at resistance. Guys, I did it this morning. I took a perfect long trade. Fit my rules exactly. When it didn't work and it overran it a little bit, market flow gave me a signal. But guys, a market flow signal doesn't mean anything if your rules aren't met. At that point, my rules weren't met. And I took it a second time. And not only did I lose that second trade, I got slipped. And it was a big loss that could have been avoided. But in my brain, I was so convinced, and it wasn't this trade, but I was so convinced that that long was supposed to work that I said, to hell with everybody with deeper pockets. I'm going long again. I'm not sure, Gary. It might have been. I don't remember. It's either ES or crude. So when that happens, you take a deep breath. When you know you broke your rules, you take a deep breath and you go back to your plan, guys. You kind of see termination conditions. And you know what, Elvis? I don't disagree with you. If you can't go long, why not go short, right? But what has to happen? The difference is how quickly you're willing to jump in. I love an edge. Guys, I have so much confidence in fibs, it's ridiculous. But if this is really going to hold, these are going to roll, right? Doesn't mean I can trade into support with no trigger lines through. If this is really going to be a bottom down here, these trigger lines are going to roll. What did it look like here? For those of you that thought that this was going to be a termination condition that causes a full reversal, and you even had 3 divergences and you said, yes, it's time to go long, but you're still fighting triggers and you're still fighting termination conditions. What are the advantages that you have? What are the advantages that you're giving away? And does it mean that you have a trade? Ed, termination, full reversal, triggers roll, pull back to the area, easy money. It's that patience piece. This area says it's going to hold, without a doubt, but everything here says it's going down. So you wait for it to roll, and you look for your opportunity. Ed, I love that trade. That's a great looking trade. Ron C., I love that. I love that quote. Learn your rules like a scholar so you can break them like an artist. Large triggers are still up. Small triggers are coming down. Nice, Elvis. Building that patience, right? But if it's really going to be a top, look what happened. Trigger lines rolled. Large triggers rolled. Small triggers are breaking support. They haven't yet, right? Now we have a 50-50 with odds favorable momentum. If there's no divergence on a pullback, that one fits my rules. Termination creates a full reversal, gives me odds favorable momentum. It's a 50-50. There's my first trouble spot. Still a 50-50. If divergence prints, for me, no trade. If divergence doesn't print, I'm very willing to get in at the bottom of that window. That's my plan, guys. I wrote it out on a piece of paper. I studied it. I own it. My trade is. And I commit to it 100% every time. Because consistency is key, isn't it? Areas broken. Odds favorable momentum. No termination conditions. There's your bottom of the window. Guys, give me a Y in the room if you don't see it. Because let's talk about it. There's your window. There's your odds favorable momentum. There's your no termination conditions, right? Looking for a pullback to the bottom of the window inside of favorable large triggers. My window goes from 39.50 to 41.75. Does everybody see it? Guys, I'm not telling you to take a trade. What I'm telling you is to recognize if the rules are met. And if your rules are met, you have an obligation to your plan to pull the trigger. If your rules aren't met, you have that same obligation to avoid it. Elvis, which one did you need me to go over again? I'm sorry. I got on a soapbox. I didn't see when you posted that. But the answer is yes. I absolutely will. Please, guys, give me something to talk about. Who jumped in afraid it was going without him? Small's below the large, right, Elvis? Large are wide, angled in the direction of the trend. Large triggers and small triggers have broken through the area. Therefore, the area is broken. Looking for a pullback. If you put your entry 2 ticks below that mid band, you're probably in the trade right now. Here's the top of your window of opportunity. And there's part of your 30%. Jose, I rebuilt mine yesterday. Are you on the right contract, Jose? 3906. Just is what it is. It's a good trade, isn't it? You had a window of opportunity, strong triggers, no termination conditions. 1222. We are on 323, Jose. The S&P is rolled. Cool. If you need help, let me know. Elvis, you didn't know about this second divergence, right? You didn't know. Guys, I want you to do this. Awesome, Jose. Let's go through the checklist. Is the market coming from a good top or bottom? Guys, you answer. Let's get some class participation here. Am I coming from a termination condition that creates a full reversal? Anybody? Nobody? It's one of those classes today. It is. Do I have odds favorable momentum? I do. No termination conditions? Absolutely. Did I have an area of resistance inside of favorable large triggers? I did, right? Guys, the hardest thing for new users to come to terms with, if the checklist is 100%, you have taken a trade that has been proven over time to give a statistical advantage. That typically results in 70 to 80% winners. If this trade loses and your checklist is 100% truthfully, move on. Sometimes the market is wrong. We don't control it. Someone with deep pockets wanted it to go up. Next. When you truly believe in your rules, when you truly believe that this checklist being 100% met gives you a statistical advantage because you've done the study, you've done the back testing, and you know that when you follow this checklist, you win 70 to 80% of the time. You have to be mentally prepared to lose 20 to 30. You have to be financially prepared to lose 20 to 30. And more importantly, stop trying to figure out why it didn't work. We don't control the market. Somebody named Bob with $10 million in his account said, you know what? I want it to go up. And it did. We don't control the market. And this is a hard thing to realize. And what it means is that when you enter here and you get stopped out here, Mike, Bob, whatever, you know, it just means that it didn't work. You had a statistical advantage. You were patient, you waited, everything lined up, and it just didn't work. And guys, that's hard. Because this is where, when this one doesn't work, you try this one. And when that one doesn't work, you try and get in on this down bar. And that one took you straight up too, right? They're in a fight, guys. Let them work it out. You had every rule met. I hope you took that trade. 50-50 trade from a pivot stop out, right? No divergence. If you entered at the area of support inside of favorable large triggers, you already have a stop established. If divergence prints, it's changed everything for you, hasn't it? Once again, look at the fight. Sellers, buyers, sellers, buyers. You know what my least favorite trade in the world is? Is a 50-50 trade on a market that's already proven that it can't break out of a range. They work every now and then, and when they do work, they typically run a lot. And when they don't work, they come back and retest. It's all about advantages, guys, 100%. But there's a 50-50, no divergence, and at the area. Stop is established. You probably took profits on the first. You're probably break even because the area hasn't broken yet. It has the potential to break with odds favorable momentum, but it hasn't broken yet. I know a couple of you are in this one. You've already taken profits. You've already gone break even. One-to-ones, no trigger lines through, loss of momentum. All we're doing is reading charts, guys. That's it. Are my rules met? Are my rules not met? So let's talk about the step-by-step path to becoming a proficient trader. Guys, I feel like I'm rambling today. Not a ton of opportunities. Some days, you got to know when to just sit on your hands and be patient. If your tongue is over your eye teeth, you can't see what you're saying. I don't know what that means. Step-by-step path to becoming a confident trader ASAP. I'm going to figure that one out, Ron. It's going to take me a second. Guys, two things that are listed first on this. The first one I feel is the absolute most important. Post your trades in class. Get feedback. Think about the people that are successful in sports, the people that are successful in business. Most of them had a coach. Most of them had a mentor. Most of them had somebody looking at them from the outside, helping to get them where they want to be. That's what posting in class is, guys. You're letting me take my 2 years of reading these indicators and help you identify things that you may not see as you're on your journey, things that you'll see super easy eventually. But the odds are favorable that I see more than you do right now. So let me look at your charts. Let's talk about them. Track your performance in the spreadsheet, guys. Pull this thing up and track everything you do. Am I breaking rules? Am I following rules? Recognize your patterns. Recognize the ones that'll get you in. Recognize the ones that are going to help you manage. Identify those termination conditions that are giving you problem. Maybe that vacuum is giving you problem. When an area is reached and the large triggers don't follow, they remain a full bar away. Long trades in this area rarely work. This is a pattern. You should have 100 pictures like that in your spreadsheet so you can go back and study them and never trade into them. Resistance in the mid-band, large triggers a full bar away. Any longs here got stopped out as it closed the gap to the large triggers. Same thing here. Closes the gap to the large triggers. You guys ever look for these patterns? Resistance, mid-band, closes the gap to the large triggers. Mid-band, closes the gap. Right up to that mid-band, resistance, closes the gap. Over and over, guys. 50-50, great entry, wonderful management. Nice trade, Jose. 50-50, no divergence, increases the likelihood. We're coming from a pivot stop out. Jose, picture perfect. Couldn't have done that one any better. Could not have executed that one any cleaner. Remember when I said when a market's a little range bound, if the 50-50 works, it runs? There it goes, guys. Gave you an absolutely perfect rules-based entry for a long trade. Anyone else catch that one other than Jose? Nice, Alex. What do we have now? We have a market that's losing momentum a little bit, right? Right at a key area. Keep an eyes to see if there's change happening on the smaller charts. Yuri, let's see what you did. Yuri says 50-50, no divergence. Take that trade, make some money. Beautiful trade, Yuri. Nice trade. Looks like we've had a couple challenges. Guys, I notice these things. When I see negative P&L after a big winner, it lets me know that you're not showing me all your losers. Lets me know that you're treating it like your mom's refrigerator. You just want me to be proud of you. You don't want me to correct you. Guys, there's more information in losers than there are in winners. Alex, picture perfect. Guys, I love your exits too. But let's talk about management, right? Alex, I know you're predetermined. I know you're working on that management. Holding for the second. Didn't your trigger line say that that fib was probably going to happen? Didn't these trigger lines say it was probably going to happen? Didn't those trigger lines say it was probably going to happen? Pretty cool, right? Awesome. So you're not moving the second target yet. I know that we've talked about you're looking at it, so that's a great look. That's a great look. Ed, what on earth is this? I understand the mid-band long, letting things turn. Yeah. Management left something to be desired there, Ed. Elvis, I'm assuming that you actually know what I was saying, but people in this room tend to post winners and hide their losers. Because they feel like if they're posting losers, then they're posting that they don't know everything about the software. They're posting that maybe they might be brand new and they don't have all the answers. And guys, that makes people uncomfortable. What if Mark knows that I'm new? Guys, I know that you're new. That's why you're here. I want you posting mistakes so that we can fix them. If you always hide your mistakes and you don't know why they were mistakes, then you're going to keep making them. And sometimes you're going to get stopped out. And if you don't post it, you might think you did something wrong, right? What did I do wrong? How did I screw up my rules? What did I not notice? Well, you hit it 100%. If you took this trade and you were feeling bad about the loss, hopefully by posting it in class, you feel better about it. I'm assuming you got in right here, 66.55, Ed. Yeah, strong triggers, pull back to the mid band, you let things roll. I love it. Ed, I think you're using that 21 the way it's intended to be used. I think your management, they just got you. They turned from the middle of nowhere, right? I don't know that I would have kept myself in a spot where I would lose money after being up that much. Does that make sense, Ed? It's cool to go for bigger moves, but you still have to be a little fiscally responsible. Like at this point, so you're going for bigger moves, right? But you're still using your 5-1 for entry. So check this out, Ed. Initial stop was probably below this pivot, right? You can see it. When this pivot is formed, there's a stop movement. When this pivot is formed, there's a stop movement. So if anything, it's still not a lot, but it's not a loss, but it's a pragmatic. You've let your 5-1 create these pivots on the way up. And you just kind of follow your stop behind the pivots. Maybe even that little stab back there. Does that make sense? Bigger moves are awesome. And there's a lot of opportunity in those bigger moves. But take advantage of that smaller, faster chart for stop placement. You know, you didn't get any indication that this market wanted to do this. That was Bob in his deep pockets getting you again. But if Bob shows up to the party, protect your assets. The goal is to make money. Jose, let's see what's going on. Small above the large, losing momentum on a 50-50 with divergence. Jose, loss of momentum. I love that you guys post these. Remember we said, what are the advantages that your rules give you? And more importantly, what are the advantages that you're giving away if they're not met? So Jose, you're losing momentum. The smalls are working their way inside of the large. Not a deal breaker if you have a clear path, but your large triggers haven't cleared the area yet. So you are loss of momentum, 50-50, divergence. You gave away a lot of strength to the upside there on an area that hasn't been broken yet. And Jose, one thing that I noticed on this one is not only is this a key Fibonacci area, it's also a divergence high. Giving away a little bit there. You're still doing well. Loss of momentum, loss of momentum. Did that make sense, Jose? And not just Jose, does that make sense to everybody? If your rules provide you an advantage, what are you giving away if you break your rules? And remember that your rules are going to grow, right? Your rules are going to grow with you. Yeah, Elvis, I think we've all had that, right? We've all had those trades where we're like, man, there is no way that this isn't going to the next area. And you get a little loose with protecting your money because it is what it is. Yeah. I've given a lot of money back on trades that were supposed to go someplace. That's why my management plan gets me to break even after a certain point. Because if it doesn't work out, I don't want to lose money. Guys, there's that termination condition, full reversal, odds favorable. They're trying again, aren't they? They are trying again. Sellers, buyers push them to resistance. Sellers try again. Buyers push them up to resistance. Sellers trying again. Where do you suppose those sellers are trying to get to? Maybe 39.03? You think that's their goal? If Fibonacci is any indication? We'll see. We'll see what happens. Does anybody else have amazing software that lets you know exactly where the first trouble spot is and you should gauge the reaction if the market gets there? I hope so. Hope you're looking at the same charts as me. Guys, I'm going to take a few minutes. I will be back. Last hour belongs to you guys. We're going to look at our charts. We're going to read our indicators. I need you guys asking questions or it's going to be a real quiet. Last hour. I'll be back in a minute, guys. All right, guys, let's get into this last hour. Some days I feel kind of smart. It's almost like being able to see the future. I can't. I don't know what's going to happen. I never know what's going to happen. But I know where things are likely to happen. I know where things are likely to reverse. I know where things are likely to slow down, to take a bounce. I know that when I have a 50-50 trade at a key area and divergence prints, it kills my chance of success. Jose, odds favorable, 50-50, no divergence, nice entry, money, money. Great job, Jose. Good looking trade. Excuse me while my voice cracks. Gary, same trade. There was that weak triggers hanging out. You took it too, right? Giving away those advantages. That one worked out nicely. Going long, going long, going long. One more long. And then Gary, then we get that 50-50 with divergence, and they relieve you of your money. You keep forgetting that's a termination condition. Maybe, watch this. An adjustment on the spreadsheet. There you go. A little addendum for the termination conditions. Just that reminder on your spreadsheet until you get comfortable recognizing them always. You didn't take Jose's trade? That's okay, because that was Jose's trade, right? Wasn't quite at those areas, so you chose not to take it. Nothing wrong with that, Alex. Absolutely nothing wrong with you following your rules. Good job. Sometimes it's going to happen. Sometimes you're going to miss the move because your rules weren't met. Guys, I would rather miss 100 moves because my rules aren't met than take 100 losses. Elvis, it was just on where he had termination conditions, I put cyan and magenta lines. Because Gary told me that he forgets that that's a termination condition sometimes. Gary, it would have helped up here too on that 50-50, recognizing that divergence and the fib on a 50-50. Lost the momentum, probably would have kept you out of that trade as well. Guys, look at it bounce. They're fighting. It's a huge fight. What do you guys want to talk about? Who's going to win? Gary, did you update? See, I love that. One of the greatest things you can do, or one of the greatest things when you recognize a pattern, is give yourself a safety net. Like if you know that your trouble is termination conditions, guys, true story. When I would want to take a trade initially, I would literally, the first thing I would do is I would take a picture pre-trade, and I would start searching for termination conditions because I was so good at trading into them. Guys, termination conditions were my Achilles heel when I first started trading. And I would take trades into these areas with everything else looking perfect, and I couldn't for the life of me figure out why I was losing. I really couldn't. I was like, man, the market hates me. My brother's full of crap, whatever. And then I started posting in the room, and John Novak started telling me, hey, Mark, you're trading into a lot of termination conditions. You're taking away that path. I want you to look at your trigger lines. I want you to look at these areas. I want you to recognize this. And I did the same thing. So that little bit of feedback. So I started creating a safety net for myself in the form of a pre-trade. And the first thing, and really the only thing that I would look for, are those termination conditions. And now we're starting to break it, right? That termination condition created a push all the way up to resistance. Triggers didn't follow. Market's continuing down. Smalls are trying to break below the large. We're trading at 33. 30 points below us is the next Fibonacci support. If you're watching a 21-3 chart, you see the exact same fight on a slower path. News yesterday killed this. Just a little indecision, right? Indecision happens. Some days, I had a guy that I worked with, he used to tell me, he goes, some days you're the boot and some days you're the butt. Some days everything is perfect and some days it's just not going your way. If your rules aren't met and you're not taking trades, congratulations. You're staying out of trouble, right? You're following a plan. You're being successful there. A lot of fighting going on in the market right now, guys. A lot of indecision. Our smaller, faster chart is showing us that indecision. If you took this short, split triggers, not the best look, but if you took this short from the mid band, you had minimal risk. You probably caught that $100 profit target if that's your thing. Higher divergence says it's going to push higher, right? Reading those indicators, getting the best information that you can get. $50-50 with divergence, didn't work out. It comes up to the higher area, likely to hold. So you take the entry, Gary, and you make it back. So we talk about recognizing patterns in ourselves, right, guys? We talk about posting pictures, taking trades, and never studying trades doesn't do you any good, guys. Taking trades and never learning anything from what you do, that's not how you get better. That's like going to the batting cages and just swinging the bat, swinging the bat, swinging the bat, no goal. Going to the driving range, not working on anything. So when I see this, and it's 11:12 a.m., I'm going to ask myself, you guys are going to hate this. And Gary, you can answer. I don't know if you know the answer. We all probably have a different answer. How many times Do I lose that 50-50 trade with divergence? How many times does divergence print on my smaller, faster chart with a 50-50 trade? And how many times do I lose? And guys, this is the first step, because I had to go through this. And then the next step is when I lost, it takes study. How many times did it push up to that area likely to hold? How many times did it push down to that area likely to hold? And then I asked myself, were there any identifying, like anything happening at this area? Maybe a market flow signal, maybe a pivot stop out. Is there anything that I can do through study to avoid taking this one that has such a low chance of survival and find some patience waiting for the one that seems to win more? This is the journey that you're on, whether you know it or not, guys. This is the journey that you're on. Figuring out how to avoid what takes your money and how to capitalize on the advantages. Mary rocks. Odds favorable. No termination. You do have a divergence. You get in on the second push-up. First target hit. Second target break even. Nice trade. Very nice trade. That's your first trade of the day? I like it. Rules met trade, right? Nice entry. Comes up a little higher. Your stop keeps you safe. First target at 38. Now, Mary, yesterday your trading plan had 15 ticks as the first target. Has that changed? Okay. I pay attention, guys. I really do. I like the trade. Going with 12. Okay. And then moving to break even after the first target's hit. So 120 in the bank on a trade that wasn't working the way it was supposed to. Nice job. Way to capitalize, right? Get in, make money, that's the goal. Pivot stop out with the smalls above the large, coming right from a high volume area with a reversal bar on it. I love your exit. Both of these charts told you, take your money, wait for the next advantage. Nice job, Mary. Gary, you will recognize the differences more and more the more you post in the room, and we talk about it a lot. And it took me a while. And guys, I can only speak from my experience with this. It took me a while to recognize. There were times where I would have sworn, hand on a Bible, that I took the exact same 10 trades. And then I would present them to John, and John would say, well, look at this trigger configuration. John would say, look, see how you're losing momentum here? Notice how you have divergence. So you know that you're losing momentum twice. It may push higher. And these were the conversations that we had. This look isn't the same as this look, is it? This look is the tail end of momentum. This look is a loss of momentum. So the expectations might be a little different. And this is just repetition. It's just muscle memory, going through it over and over and over again. There's a reason. I sound like a broken record, I'm sorry. There's a reason that we talk about the high probability trend trade, and we talk about committing 30 days to it. 30 days to not chasing, 30 days to not jumping in, 30 days to reading your indicators, 30 days of keeping everything super, super mechanical. I got a little phlegm working, Ed. I think allergies are up. Maybe I'm getting a cold. I don't know. I don't think so. I don't get colds. I'm like Superman. Get a little phlegmy now and then. It's the tornadoes. It's tornado dust in my lungs right now. Maybe. Maybe it's from packing up. Dust from the boxes. We're packing up Dallas. We're out of here this weekend, so getting everything ready to go. But there's such a reason that we stay on the most basic, right? Recognizing that we've lost the advantage of momentum, recognizing that we've given it away again. So if you take the trade, you were able to get break even, or not break even, you probably took a little loss here. But you can look at it and you can say, well, I did give away the advantage of momentum a little bit. I did give it away a second time. It was okay to expect a little deeper push. Does that make sense? Here I was losing momentum because I was losing momentum and I had divergence and I had split triggers. Do you see how that starts compounding a little bit? All right, I've given away the advantage of momentum. All right, I just gave it away again. And look at those trigger lines, Jose. And let's take the picture. I love pictures, guys. I really think that the more pictures you take and write on, the more you're inclined to remember the lessons. Jose, your window of opportunity goes from 24.25 to 27, right? Almost 3 whole points on these split triggers. Your small are returning to the large pretty quick. There's your lowest point of resistance. There's your highest point of resistance. That's a huge gap on those split triggers. And it kind of did exactly what this did, right? It went down to that second set on that split all the way down. Whoops, sorry. And then it gave a little push. They tried. So if you got in, you probably took a small loss. But you begin to recognize these patterns over and over. Maybe the loss of momentum isn't my best look. Maybe the loss of momentum coupled with split triggers and a huge window of opportunity isn't my best look. Now it pushes all the way up to a mid-band. Large triggers are a full bar away. All the way down here at 25, right? And you start going through patterns in your head again. Well, this is a pivot that didn't come from an area. This is a pivot that didn't come from an area, and isn't it following the pattern? Not from an area to the mid-band, not from the area, a little beyond a resistance, not from the area to the mid-band, not from the area to the mid-band. Is that enough to keep you a little weary with the large triggers so far away? Maybe they push up to here, maybe they stop here. But as of now, I'm waiting for the advantage. Yep, Jose, you took it and managed it well. That's a tiny little loss on a trade with a lot of potential. And guys, sometimes you've got to give up 5 or 6 ticks. Sometimes you just have to lose a trade because the potential for the winner is so big that you can justify and validate the trade. And Jose, I think you were justified. There's that anything can happen with divergence again, pushes up. Large triggers don't follow, pushes down. Higher divergence, pushes up. Still a termination condition here. We'll see what happens at 76.23. Being vocal with everything you do. What do I see? What are my advantages? Right now I see price above an area of resistance. I see all the trigger lines below it. My synthetic triggers are down on my 5-1. My large triggers are turning on my 5-1. My large triggers are still red and down on my 13-2. I've had one divergence at the bottom. I've had a divergence at the top. I don't have odds favorable momentum. I don't have a clear path. Guys, this is what we call a time to make a sandwich pattern. A time to go out to lunch pattern. A time to go change the laundry load pattern. There are 0 advantages to be had. Mid-band, odds favorable, large triggers, full bar away. So now you start looking, what happens if they pull back to these large triggers with odds favorable momentum? Where does it line up? Do I have solid stacked areas? You don't. Really not a trade to be had. Not one that fits the rules. Not with the large triggers this far away. Let's see if they close the gap. Sometimes they do. Sometimes they don't. But what's the pattern? What's the pattern? The pattern is that when the mid-band is reached and the large triggers are a full bar away, that very often they come back and close the gap to that large trigger. When the pivot that got you to the mid-band doesn't come from an area, and you reach a mid-band, and the large triggers are a full bar away, sometimes the market likes to continue in the overall direction of the trend. Jose, anything can happen. You held on to that one for a little bit. Why? Because everything was below, right? And you said, I'm going to keep my stop in place. And you made some money out of it. Jose, I don't hate this. Everything is below resistance. Every indicator is below resistance. You get in at the resistance it's likely to hold, and you give it a shot. All your large triggers stay down. All your triggers stay down. And then when it returned to those large triggers, gave you a higher divergence, you said, all right, I'm out. I don't disagree with it, Jose. It's not the best look. Exact same trade. Giving up a little bit of momentum. Still not a bad look. Divergence from the 1-to-1, divergence from here. You enter the market, you enter it beautifully. And they just had other plans, didn't they? Hey, Richard G. And Mary, you even had market flow confirmation at the area. Great place to put your stop behind. It's logical, it's pragmatic. There's more advantages than disadvantages. Just didn't work. I think you handled it beautifully. I think you took a great trade and your stop makes sense. It just didn't work. Close the gap. Didn't it? How's that for a pattern? Anybody see that coming? Now let's see what happens at this key area. Are they going to break through those large triggers and continue the push down? Or the buyers going to try to capitalize on a little bit of this momentum and maybe push it up higher. Don't have rules met for a trade, guys. There are 0 areas inside of favorable large triggers. It's not a trend trade. Does that make sense? If there's nothing here, you can't trade from someplace. What's a larger chart say? Larger chart also says weak triggers, but everything is down. A divergence printed. Still not coming from areas. You say 39.22? Why? There's nothing there. Why would you pick an empty spot on a chart as your guess? I know you have a reason. Do you have a larger chart? It's going to the reversal on the large at least. That's, oh, did you mean 32? Or come down to 2150? So let's talk through it. Shane, you think that with all this odds favorable momentum to the upside, they're going to retest something lower? Okay. So then the next question, is that chart reading or is that a potential trade? And I say that because do a lot of chart reading, but don't do it based on guesses. I think they're going to come retest. Have a reason. Say because this pivot came from nowhere, because the mid-band had large triggers a full bar away, patterns suggest that it may go down and retest that low. But with this momentum, this is my sticking point. And guys, look what's happening on your 5-1. Larger up, smaller down, market's going sideways. The momentum is up. Momentum wins. Pretty cool, right? We could gauge that it might pull back to these large triggers because of a pattern. But we have to wait and see what happens at these large triggers to determine whether or not there's an advantage to take a trade. Paul got emotional and managed out quick because the window scared me. Got in at the lowest point. Where did you get in here? So that's this one right here. All right, quick profits. Oh, break even on both, huh? Didn't quite hit that 41. It's okay. What part of it didn't you trust? You had odds favorable momentum. Did you get John's lesson this morning? That a white bar at the bottom might push it up higher. That was a pretty good one. He was talking about that on the S&P. There was a white bar that was a pivot. Because I love the look. Love everything about the look there. It just pushed up a little higher. Here we go, guys. Triggers reached. Market goes sideways. Buyers had a loss of momentum. We'll see what happens. I love patterns, guys. Patterns can make you and break you. Divergence, divergence. Pivot stop out, gives it a good push. Pushes all the way down, can't make that next area, comes all the way to the mid-band. Do you see it? Mid-band push, little higher push, mid-band push. There's that mid-band again. They're trying. Guys, they see it too. Arnold, perfect. 100% perfect. I might not have had my stop so high. Smalls below the large, no termination conditions. Everything says down. I know, Shane. That's okay, Bobby T. Shane, I know exactly why you said it, and I think it's great because it means that you're recognizing patterns, right? Arnold, initially, I put my stop where the market shouldn't go, if that makes sense. So, where's your picture? If I have odds favorable momentum, and if I have no termination conditions, and my only area of resistance is inside of favorable large triggers right here, doesn't it stand to reason that if I come up too much beyond that window, it's probably not my trade anymore? Something has changed, right? So in at 98.50, honestly, your stop is probably appropriate. You're giving it 2 points, even 401. Yeah, that's your only window. That's it. This is your window of opportunity. Once it blows beyond that, you've given away those advantages. And Shane, when you're talking about why you thought they would retest it, it's all patterns, right? Arnold, you can do whatever you want. So Shane, that's great pattern reading. Maybe I don't understand the question, Arnold. Ed, why are you so focused on 22? What's going on your chart at 22? Because I'm looking at 22 right here in no man's land. Mid-band, smalls down, large up, pivot, stop out, flat triggers. For instance, sell at 22 instead of buy. So Arnold, you're asking if you can put a sell order down here below the market? Because if you put sell, it's going to fill you instantly. It's going to give you the best price possible, which is all the way up here. Now you can right click and put a sell stop, which means that if the market comes down to here, you want to be in. But that seems silly. As long as you have rules for it. Joel, always at the mercy, right? All right, Miss Mary, let's see what you did. In just a little bit late. So Mary, let me ask, do you know where the right entry was? Exactly. You know this trade. So when you got in at 62, you still had 10 ticks down to that divergence, right? And when you got down to that divergence, conditions changed. You got a second. You got a pivot stop out with the small triggers inside. I think you handled that one perfect. You were losing momentum, but you still had it. I think you did everything right. I think your recognition was great. I think your management was awesome. And I think that better entry at 69, 68, just gives you a little extra money in the bank. And I think we've all done that. We've annotated, or we've gone to the bathroom, or had to run to the kitchen. And we come back, we're like, oh my gosh, that is the perfect trade. Everything says go. And we get in a little late. We know where our stop has to be. We know where our trouble spot is. I think for a trade that was entered late, your management is amazing. Great job. Identifying that first trouble spot, right? That's key, guys. Knowing where the market is having problems. Look at this. Your 8 range gave you support and a reversal bar printed from that support. And then it gave you this beautiful pivot stop out that matched with a pivot stop out that matched with the loss of momentum. Great job. I think you're finding your groove a little bit. It's showing in your charts. It looks a lot more pragmatic than it does emotional. There doesn't appear to be the same fear level that there was a week or two ago. So, and it's part of it. And you'll go back and you'll have a, oh my gosh, I'm scared to death day. We all do. So guys, we knew that we shouldn't go long because it was closing the gap. We knew that we shouldn't go short because we didn't have any momentum in our favor. Anybody get chopped up in here because they're bored trying to predict where the market's going? Look at your 5-1. How ugly is that? Good job, Shane. Jose, have a great day. Appreciate you being here. Always do. Know your place, right? Know your place. I am not a shark, guys. I will be one day, but I'm not a shark yet. I'm about 999,998 contracts away from being a shark. But I'm close. But if you keep that mentality that you're not in control, that you have to wait for advantages, you'll be amazed at how many maybe trades you stay out of. Here's a pivot stop out with the small triggers on top of the large triggers. It's coming from resistance that held like a champ, right? It may break, but it may not. It could break, but then again, my smalls are on top of the large. Not going to get roped in on my 5-1. Not even going to look at that. Oh, awesome, Ron. Say hi to the Sharks for me. I'm so ready to go to Florida. Almost there. Couple weeks. I don't know, Shane. I suppose so. The real question is, could we all get filled? Would there be 100,000 traders to take the other side of our trade? So, I don't know, maybe. Can I trade 100,000? Oh, that's 1 million. Can I trade 100,000? Can I go short with 100,000? Guys, this is a simulator. Ah, it says no way, it's not going to let me. There you go. Gotta blame somebody, Arnold. Check it out, guys. Mid-band held again. Ed, there was your 22. If 22 holds, we're going to try you as a witch. But 23 is a pivot stop out, right? Ed's a guru now. So now we're at a 50-50 at a pivot stop out. If they go to 3903, guys, I'm going to get a Zoltar tattoo. Isn't it cool? Patterns give you a broad stroke, right? I recognize this pattern. I've seen this before. This is something that's happened over and over. When price comes from resistance, clears an area, tests resistance, finds the area, up to resistance, clears the area, tests resistance, finds the area. The fight happens, clears the area, tests resistance. Doesn't make it, tests resistance, makes the area, the fight happens, sellers win. Clears the area, back to resistance. Clears, back, clears, back, doesn't make it, back, doesn't make it, back. Do you see it? Am I the only one that thinks it's just amazingly cool that these patterns repeat themselves over and over and over again? Guys, this is a 50-50 trade with divergence. Some of you have a plan for this. What does your plan say? If you haven't written a plan, write your plan, guys. If this happens, then I'll do this. If these conditions are met, I'll enter a trade. If these conditions aren't met, I'm going to stay the heck out of a trade because my rules aren't met, and the rules are the only thing that I have to protect me. Guys, that's not even a 50-50. Small triggers didn't make it through 23. Do you see that? Shane, it can be. Right now, it's two divergences. The second one is higher. We're definitely seeing a loss of momentum. But three divergences in the same general price range, that's the one that's money. Look what they did here. Created a loss of momentum, price pushed up. Created a loss of momentum, price pushed up. Guys, I know that cyan bar didn't finish printing. But isn't that kind of a pivot stop out off of a pretty key area already? Ed, I don't have any idea what trades you took to get 15 ticks, 12 ticks. Any longs, certainly. I didn't, Elvis. I can't see them in here. I'm on a completely different page. Just got it, Elvis. I try to do that. I feel like I try to do that. There's a point when the indicators don't line up and you got to talk about something, right? Doesn't always have to be trading. Right on. Guys, there's your pushback. Right to resistance. No momentum. Didn't we say that? I'm just closing this chart because my rules aren't met on the 13-2. No momentum on that push at all. Didn't work out. Guys, there's a 50-50 with divergence that worked. Shane, it's fun for me. I feel, guys, honest to goodness, I feel like I ramble a lot sometimes. But this is how my brain works. When I'm trading, I literally talk myself through everything the same way I talk about with you. More bad news for Russia, never enough bad news for Russia. That's an Army combat veteran that probably lived through the Cold War. Ed, don't predict what you're going to do in the room. Just do it and show me pictures. Do it and show me pictures. What happens in this room, guys, and I have to say this every now and then, is I never want you to tell me what you're going to do. I never want you to tell me, go short at this number, go long at this number. I want you to do it, and I want you to show me a picture and tell me why you did it. But what I don't ever want to happen in this room is somebody brand new thinking to themselves, oh, this guy said I should be long, so I'm long. This guy said I should be short, so I'm short. Does that make sense? And sometimes people pop in here and they say that, and guys, if you're brand new, you definitely lead the witness a little bit with statements like that. We don't want to do that. We want to focus on rules met, right? 100%. No, but I believe it, Ed. I believe it. Chart traders, not chat traders. I like it. Now don't we have the advantage of a clear path? Odds favorable, no terms.
Order pending.
Now couldn't we place an order right here and say that this has the advantage of momentum? This has the advantage of a clear path. And in the event of a pullback, couldn't we say that it has the advantage of you being able to see without question, based on study and patterns and everything, the tiniest window of opportunity where the market is likely to continue? Luciano, you took the 50-50 with divergence. It worked out great. You waited for market flow confirmation. Luciano, I love that. Way to use that next chart. Luciano says that when there is divergence and a 50-50, he'll use market flow to get him in. Right up here, Luciano had a market flow signal. Guys, I have a window of opportunity that lines up with a high volume area trade. Nexgen Ben said once, when it's obvious, it's obvious. Right click, limit order. Is it going to make it, guys? I don't know. Is it going to win? I don't know. I do know that the chances of it winning are more likely than the chances of it losing. But this is a market that's been kind of zany, isn't it? It might come get me. It might not. Luciano, that was your short. I like it. Then I believe this was your market flow signal. Waited for confirmation. Confirmation costs a couple ticks, but you got it. Had a reversal bar. It's appropriate to move a stop. Guys, I'll take a loser all day long on this trade. Watch that. We'll put that at the next Fibonacci area. Either does or it doesn't. It's out of my control at this point. Odds favorable. No termination conditions. Window of opportunity is a little bit bigger because of split triggers, right? You guys see it? All that patience. That one's not doing anything good, is it? Right back to the window of opportunity. Window of opportunity extends from 83 down to 70. But there's a lot of momentum. Can identify the next potential target. Should it get there? I don't like how it squishes everything up. That's okay. If you were in at 84, you've already taken $100. Maybe you're break even at this point, looking to let the next one go. Maybe a lower divergence changes your plan. It's just rules, right, guys? That's all it is. Window of opportunity is from the mid-band to this area of support inside of the... Absolutely. So NG, you've got it. The window of opportunity goes from your highest point of support to your lowest point of support inside of favorable large triggers. Ed took that long, took quick profits. Nice job. They got me. I'll take it 100 times. Take that trade 100 times. Every time it sets up. Because where that one didn't work, this one's working like a champ, isn't it? Is there a statistical advantage? Is there a statistical advantage every time? I know, right, Shane? Every time you pull the trigger, do you increase your odds of success? Guys, we just watched it. One of them didn't work. This one's working amazing, isn't it? That's what we do each and every day, guys. That's it for me. Gonna end this day on one winner, one loser, 50